Okay, so we're gonna start with chapter 8, problem number 34. And hopefully before you start, you just get a blank sheet of paper and you write out the framework for this. And I can't emphasize enough practicing this and getting them down and then trying to kind of go through and fill in the blanks. I can say that over the 20-some years I've taught it, those people who refuse and think they can learn it without just kind of setting out the framework fail much more often than those people who actually practice and practice the framework. So set it out, pause this tape, set your framework up, and then see if you've got it. So for materials, hopefully you've paused it and written it out, but materials, actual quantity times actual price, actual quantity times standard price, standard quantity allowed times standard price, and in the middle I need two actual quantities times standard price, one with quantity purchased, one with quantity used, and then you can go on down for the other two. Okay, notice under your overheads, get this. Notice these two numbers are the same, and these two numbers are the same. That's why I tend to just say actual cost, flexible budget, and allocated, or I call it applied. Technically speaking, probably the flexible budget is based on actual quantity of 20 that you made times the standard input each. So like if you're thinking about it, how much variable cost would I have used? Well, if I'm going to budget, I don't have actual information yet. Okay, so a flexible budget is based on us not having actual information. So over here, technically this isn't the flexible budget because I don't know, I won't really know that how many of the base denominator things I use, but I use the term flexible budget rather loosely in overhead problems and overhead variance problems, and I just prefer 3 columns. So I call this the flexible budget, even though technically it's a little bit of a twist on the flexible budget. So, but notice those two are the same and these two are the same. I just ditch this one, and I just ditch this one, and then I call this one the flexible budget, which again is a loose interpretation of what the flexible budget is. Okay, so we've got a cost accountant who manufactures expensive doorknobs. They have 2 direct cost categories, material and labor. That means we're going to have variances for material and labor. And they allocate overhead, feels manufacturing overhead is more closely related to material usage. Therefore, they allocate manufacturing overhead to production based on pounds of materials used. So right now, I would write out estimated overhead, and I'll let you write it out better than I am, divided by estimated base, and our base is pounds of material. And that's kind of important that you know the base is in pounds of materials. And quite frankly, since we just did this is materials purchased and materials used, that might even be important. That's pounds of materials used. Okay, the next thing that we need to do is figure out where our standard costs and where our actual cost is. And it says at the beginning we budgeted an annual production of 420,000 doorknobs. So you might want to put budgeted production 420,000. And we adopted the following standards. Okay, so this is important because this is our standard, and this is important because this is our actual. One other thing that I probably need to pay attention to, that this says annual production, and this says for April. So right now I'm kind of anticipating an issue with maybe needing to convert some things from a monthly to a yearly basis. But I like starting with actual, so I'm going to start with actual. And I'm going to clear this, and then I'm going to try to circle the items as I've done them. So production, 29,000 doorknobs. So remember, all this column is basically, you have a parenthesis where you have actual finished goods times the standard input each. I'm going to write that out because I'm not really sure why my cursor is not working. Times the standard input each and times the rate per unit. So kind of here, I always have actual finished goods. So look at this. I take that 29,000 there, take that 29,000 there, take that 29,000 there, and I miss this one, take the 29,000 there. So always in the far right column, the 29,000, I am taking the actual output because I'm going to move it through WIP based on what the actual output should have cost me. So this is standard quantity allowed times standard price. So right now it's 29,000, 29,000, 29,000, 29,000. And except in rare cases where you don't have that information or they give it to you differently, for the most part, if you want to always think you have to get that, you probably won't go wrong. Okay, so I'm done with that. Next one, direct materials purchase, $12,400 at $11 a pound. So I have actual quantity of 12,400 and actual quantity of 12,400, and I have $11 a pound, and so I can get my 136.4. So I'm done with that one. Next one, direct materials used. I have 8,500 pounds. So this is purchase, this is used. So right now I have 8,500 pounds right there. I'm done with that one. Next one, direct manufacturing labor, 29,200 for 671,600. So I have my 21,200 there. They don't give me the rate per hour, but they do give me the 671,200. So I can back into the rate of 23. Not all problems ask me for that rate, but I certainly can back into it. So please use a little common sense. Most people don't get paid $671,600 an hour. So don't do something that makes no sense. Okay? Then I have my actual variable manufacturing overhead right here. And I have my actual fixed manufacturing overhead right there. Okay, so look at all the numbers I've wiped out by just doing actual. Because for me, these parts over here are the places where most people make mistakes. And let's get the easy things written out. Okay, so now I'm going to go back up here to standard. So I've got all of those done right there. Yay. And remember, this is for April. So keep remembering it's only 1 month. So my direct materials are brass. So I have 0.3 pounds. So right there, this is the standard input each of 0.3 pounds at $10 a pound. So I multiply it by $10 a pound. Okay. Notice that I don't use the cost per doorknob. I would encourage you to, when you put AQ up here, that you write this 12,400. Notice right there, kind of hidden it in behind my yellow. It's pounds, to put pounds. Okay, and then put actual price per pound, actual price per pound, actual price per pound, actual price per pound. Okay, so notice this is $3 per doorknob. I could have just simply taken $29 times 3 and got the same thing. Okay, I would have still gotten 87,000. And honestly, that is completely, perfectly fine to do that. I will just tell you that other problems will set it up differently. So if you just get used to, or won't give you this number here, there are many less mistakes if I say 29,000 doorknobs, but I want pounds, so it's 0.3 pounds each times $10 a pound. Okay, so now I've got that number, and there I have $10 a pound there. So right now I'm done with all the materials. So direct manufacturing labor, again, this is standard, remember, over here, this is all standard. It's 1.2 hours. So over here, it's actual finished goods times the standard input each. If I'm doing labor, the standard input is in hours. So I multiply that by 1.2, and it says it's $17 per hour because I want my rate per hour. I don't want to take hours times cost per doorknob. Okay, so again, I know I keep harping on that, but it's just simply an error that is so common that people want to take the hours times a rate per doorknob instead of hours times a rate per hour. All right, so I should have circled this 29,200 when I put that 29,200 in, and I have my standard cost of $17 an hour. So you can see if you decide, oh, I would rather put 29,000 times this rate, 2040, you're going to get the same number here. So you're going to be right. But then what people tend to do is this 2040 that you've written here. Then they come and take it over here and put it there. In the same place here, they put $3 here and put 29,000 times 3, and then put this standard rate here. And then you're taking direct materials times the cost per a doorknob. And you can't take pounds of brass times the cost of the doorknob because it makes no sense. So that's why I'd encourage you to not do that. Okay, then my variable manufacturing overhead, I'm going to scroll down over here. I'm going to actually clear some of this. So I'll circle these two items. Hopefully you're doing this on your piece of paper. Okay, so I've got this one done, and I have the 29,000 done right there. And so my variable overhead is $5 a pound times 0.3 pounds. So again, pay attention to, notice they have the costs over here and the hours and pounds over here, and then they've suddenly flipped it. So just make sure you read your labels. It's just an attention to detail, and accountants need an attention to detail. So kind of pay attention to that. So I have 0.3 pounds, and remember up here we said we're going to allocate it based on pounds of materials. Okay, so 0.3 pounds right there times 50. I'm in fixed first. I missed my variable. 0.3 pounds times $5 a pound here and $15 a pound here. Okay, so 5 and 15. Okay, they don't always give us this rate, so I might have to do this. I might have to take estimated manufacturing overhead divided by estimated base. Okay, and so I know that my base is pounds of materials used. I know that I have 420,000 doorknobs. Each of them take 0.3 pounds. For 420,000 times 0.3 is 126,000. Okay, I know, and again, I'm using the same denominator for both fixed and variable. I also know that that my rate is $5 per pound. They could have also given me my estimated overhead, and I compute my rate. They have to, estimated overhead divided by estimated base equals the rate. They have to give you two of these three things. So if they gave you your estimated overhead, I could figure out my estimated base is 126,000 pounds, and I could figure out my rate. Here they give me my rate, and again, don't pick up the $1.50 per doorknob because you want this to be per pound, okay? And I cannot, again, emphasize enough labeling the fact that I want things in pounds, not some things in pounds and some things for doorknobs. Okay, so I know this is, let's take fixed. I know this is 15. Okay, so I want to back into this number because I know that number is my fixed overhead, in this case, annually. So that's going to lead me into some problems, but I'll talk about that in just a second. That's my annual overhead, and I know that number is going to be my budgeted fixed. So if I back into that one, I get 1,890,000. Okay? So if you're like me, you'd run and you'd jump and you'd put 890,000 in the middle there. Because remember, I'm not going to do both. I'm just going to do one of them. I'd put that there. And then I'd look over here at 158,000 and think, that's really weird. Went from 158,000 to 1,890,000. And then hopefully I'd remember that's annual and this is asking for a month. So I'm going to take that 1,890,000, divide it by 12 months, and I get 157,000. Okay, so now if you notice, for fixed, I've got that one, I've got that one, and I have all of the information for that one. For variable, again, they give me this $5 a pound, but if they gave me estimated variable overhead, I could divide it by 126,000, and I could get my $5 per pound. Okay, so now I'm going to, again, remember I don't do this one because that's the same as that one. I just do this one. I do $5 a pound. Now the only thing I have to leave is, this is variable overhead, and I am allocating it based on $5 a pound. So now my only question is, how many pounds did I actually use? And I go down here, and I see my actual pounds are 8,500. Okay, and so now I fill those in, and I have 22,200, 1,000 favorable, etc., etc. Okay, so I think I've done all those. Let's see if they have the journal entries. Okay, don't have their journal entries. Let's just talk about them. Okay, so for my pause this. Okay, so we're going to go ahead and make the journal entries over here for this one. But notice that think about your regular journal entries when you purchase raw materials. So I'm going to purchase raw materials or purchase direct materials, and I debit raw materials and I credit accounts payable. Okay. So now if you think this is a standard cost system, but I honestly go to the accounts payable first, and I might not get my debits and credits lined up very well, but I always pay actual. So this is $136,400. And I'm going to debit raw materials at the standard price. So I purchased $112,400 times 10 is $124,000. Okay, so now my debits don't equal my credits, and I have a price variance that's unfavorable. Unfavorable variances are debits, so I have my material price variance should be a debit of $12,400. Okay, so now I'm going to double check that my debits equal my credits. So I have $136,400. So my debits equal my credits. So that's materials price variance. I can't combine materials because I purchased and used different amounts. Okay, and then if you think about your journal entry, make those singular. Okay, so now if you think you're about a prior chapter journal entry for using materials in production. When you use materials in production, you take them out of raw materials and put them into WIP. So I'm going to debit WIP and credit raw materials. Okay, so now the question is, how much? Well, I always credit WIP for this side over here. This is always WIP because I'm moving it through at a standard cost. Okay, so I'm going to debit WIP for $87,000, and it's coming out of raw materials also, notice, at standard cost, but I'm going to do this one, so $85,000. Okay, because this one is basically going into WIP not only at standard cost of $10, but the standard input each. So think about this. When I issue material, or when I buy materials, I debit raw materials, credit accounts payable. When I use materials, I debit WIP, credit raw materials. But again, I don't balance. I've got a $2,000 favorable variance, and favorable variances are credits. So my materials quantity efficiency variance, I would have called that materials quantity variance, but quantity materials efficiency variance is 2,000. Last thing to check, do my debits equal my credits? They do. I'm good to go. Labor I can combine in one entry because I don't inventory labor, so my actual quantity that I pay for and use are the same thing. So think about your journal entry when you use labor. When I use labor, I'm going to debit WIP, and I'm going to credit wages payable. Okay, I always pay the actual amount, so my wages payable is $671,600. My WIP is always the standard amount, $591,600, right over here. And then I have an unfavorable variance, and unfavorable variances are debits. So I have my labor price variance. Usually we call it labor rate variance, but $175,200. And then the other one is my labor efficiency variance, and it's favorable, so I credit it. So labor efficiency variance, and it's a credit, so then I have $95,200. Okay, so now I'm going to double check my debits equal my credits. 678, 678. Okay, so hopefully they do. Pretty sure they have to. Okay. But anyway, don't discount the need to double check because it's easy to sometimes put favorable on these instead of unfavorable, etc. Okay, and then my next one is my variable overhead. Now I'm going to think about my journal entries for overhead, and I know that I make my T account of my manufacturing overhead. This is actual right there, and this is applied. Okay, and so when I have my actual costs, I'm going to debit manufacturing overhead, and I'm going to credit various accounts, various payables, cash, or whatever in the heck I do. Okay, so let's look at our actual. Our actual is 65,100, and our various payables are 65,100. Okay, that's for variable. So I should have put variable overhead there. And I know they do control. Okay. Again, I would probably throw these all in one account, but they don't. Okay. I'll do variable overhead, then I'll do fixed overhead. Okay, I apply it. I credit manufacturing overhead and debit WIP, so I debit WIP, and I credit variable overhead apply. If you would like to do variable overhead actual and variable overhead applied, that would be great too. I don't really care. And so now I need to go completely to the other side. This side always goes into WIP, so 43,500 and 43,500 should be applied, not applies. Okay. Now I need to record my variances. I know that unfavorable variances are debits, so I'm going to do variable overhead spending. And I know favorable variances are credits, so variable overhead efficiency. Is 1,000. Okay, then I'm going to close out my variable overhead applied and my variable overhead control. So my variable overhead control is a debit, so I need to credit it. And this one's a credit, so I need to debit it. Okay, so I'm going to double check that equals 43,500 plus 22,600. I'm going to subtract those out, 1,000 and 65,100. Yep, yeah, it's a 0. So I've got 66,100 over there and 66,100 over there. Okay, I'm going to do the same thing with my fixed manufacturing overhead. I'm going to do the actual first, so I debit fixed overhead control, and I'm going to credit various accounts. That could be wages payable for the supervisor's salary, it could be real estate taxes payable, it could be accumulated depreciation, whatever in the heck I'm paying. So that's 158,000. Okay, this next one, I want to apply it, so I always apply it to WIP. And WIP is always the other side, so 130,500. And I know that my credit to WIP is fixed overhead applied. Okay, all right, so for 130,500. Okay, then I need to record my variances. So my fixed overhead spending is a unfavorable, so it's a debit. And my production volume variance is also a debit, because it's unfavorable, 27,000. Okay, and so now I've got to close out. I'll close out my applied first. This is a credit, so I debit it. And I close out my control. Okay, so now I'm going to add these up to see if my debits equal my credits. And 500 plus 27,000 I could add. Equals 158,000, so I'm good and I'm done. So this is a pretty good one to review. Anyway, I would say the one thing that's easy to forget is I know the numerator of this is what goes in here, but this was for a year and I need a monthly item.